Hey, how you going? This is a video for S&P 500 where I'll look at the monthly, weekly, and daily time frame. And I'll also add an overlay for the VIX, looking at the inverse correlation between the S&P and the VIX. Although it's correlated, not causative. We'll also go through the US 30 on a monthly, weekly, and daily time frame to check out what's happening there and see the close proximity of how S&P and US follow each other quite nicely, despite having different diversification of companies and also breakdown of percentages held. And then we'll also look at the US 30 just to see what the yields are showing and how that can affect from a fundamental standpoint in the long-term growth of the index itself. So let's get into it. Just to let you know, there's a disclaimer in the description box that I am not a financial advisor. Take this with a grain of salt, and anything I say is based upon my own actions. Try and test your own method and definitely perform your own due diligence. Leave a like, share, and subscribe, all that jazz, because it lets me know that I'm doing good content and can make some more. Help you, help me, and keep the cycle going. Righto, let's go. So on the monthly, pretty clear, right? From 2020 lows, the market's produced a high curve, and being a technical analyst, high curve shows that it's not a line of best fit, but it does show the curvature of the market structure. Essentially, it should show really this proximity for a curve. However, you don't use curves that much unless you're looking for regression smoothing. So what we do is normally for a monthly, you just bracket off and look for the high positional point of a market top. You can clearly see along the way that the pivot has netted off at the previous market high, netted off again, forming a strong monthly structure and reversion point, which is where the market is right now. And then on there, it's taken on another 6 or 7 months of pure bullish momentum, which is great news for all the long-term holders. And then market decided to take a breather at the top, brand new all-time high, and did a bearish trap on the monthly and continued higher, making higher highs. And now a lot of people looking back in hindsight can tell that 4,800 is the top, right? Albeit when you're in the daily time frame trading, you don't see that. So give it a week to get your confirms, and also get your confirm to build up a consolidative level. So personally, I wait a month, accept the retest, and then I got caught out, and then accept the retest again, and then you need to make your decision based on your PCB rules of a new departure zone or a supply imbalance up here. So what's happened now is that price has tailed off as expected, exactly the same format in a bearish scenario. In a reactive fresh level here, from a first level perspective, price should head up back to our bearish curve. It is a high curve again, although this line at the moment is presently quite low. This is a high curve as it's pretty steep. So you can reformat that as time moves on. But from here, there's a lot of drop zone back down to original level. And this is the point of where buying at some point within the next year or two will be prominent. But until then, ideally, let's focus on this part of the structure. And this is a long-term goal. So finally here, at the 3,800 zone to check the weekly, see what the go is. So I've already marked up a couple of things already. What can you see is that there's an FL level, and this is caused by the large sell-off, correction or pullback, and sell-off again. Now, market after doing these things looks to relief rally. So this is your relief rally target of 4.1k. Before price should tail off again, heading back down to reactivate in the zone. So what I mean by that is that price can top like this, not straight away, but at the moment price does seem to be whipsawing quite a lot. So expect a couple of consolidative weeks before a move is measured. Price can retest this fresh level, expecting a tap or reactive price within the zone and then tailing back down, dwindling back to this part of the structure here. As the structure becomes more and more tested, the probability in bears is favorable. So do expect this to break at some point. It's not a guarantee, but fresh levels have a large amount of sellers, especially as a supply imbalance on a low time frame. So always keep that in mind. And the monthly is barely tested. So yeah, don't expect is to keep bearish momentum going. For a bull move though, however, being unbiased, if this fails to hold, then the upper trend line of the low curve will be tested, which will count as the original level here being penetrated. And then what you expect is that a break and retest most likely will occur and bring it back down to this level. So you're looking at head and shoulders overall over the coming couple of months towards October. That's just a suggested time frame. It's not going to be to the day or week at all, but yeah, take that and how it is. So if you just add the VIX over the volatility of the VIX in the S&P. So at the present, we're at 29% volatility. It's pretty heavy, but as you can see from the weekly, it's been producing higher highs, right? And we seem to be in a bit of a paradox stage at the moment whereby price is hitting a market structure reactive zone, and the same for the VIX, right? It's hit a zone and price is looking to retrace back. So this is your battleground zone here where price will look towards heading up to this FL, which means the VIX will fall back towards 25, 20, 22 zone, and the price will head up to 4.1k in a bullish scenario. If it does retest here, the VIX will produce higher up towards 32, 33% with peaks of 35, 36. Trading the VIX is heavily against you in probability. So if you do trade it, trade small amounts of risk-adjusted moves, it's going for confirms 100%, and just keep referring back to S&P 500 if you're going to do that, if you're so inclined. Taking a look at the monthly though, just really quick, you can clearly see that this massive zigzag pattern is producing higher highs again. And if you go to the VIX chart, you can see this in motion, and it's quite important to look at. So let me just load it for you really quick. It's taking its time, but righto. So for the VIX, you want to see something like this. And by the way, I'm tracking the VIX. So on the weekly, it's producing higher curve again, strong curve. Now we're looking to break this curve, and price can then take us back towards 24, or it can take us up to 35. So we're just going to be bouncing around this zone for a little bit in this diagonal until we decide to either hit this fresh level or hit this fresh level. Either one will be hit. The market decides for us, we don't decide. So trade probabilities in your favor. Let's now hit the daily for the shorter term traders. So quite a nice markup, and it's been following quite nicely. This is the weekly line still intact, producing lower lows, which is great to see. The market structure is still in place on the weekly here. I've drawn another high curve for the daily as opposed to the weekly because price is now forming a channel which is widening but still smoothing off here. There's been a strong curve which has now been broken, and price is looking to dwindle towards dwindle towards the FL level. And the FL level aligns perfectly with the curve. So why is that, right? So the reason why it aligns perfectly here is because this lower high would form, and expecting another lower high to form within the zone here. So from based off this candle and how structure's been formatted in the past, this is a zone of which price will react with, sell off, and look to retrace back to this range here. So that's a highly probable scenario. However, due to the imbalances here in netting, price can do this. I keep drawing the wrong lines. Price can do this, heading up here, across to here, roughly 39.4. it can have a nice little wick, spike out the bear trap, sell back down into this range, heavily consolidate for a while before it makes the next move. As this gets weaker and weaker in terms of touches, be aware it's like a bathtub on the level above you. It's going to fall and break. So structure can head towards 3200, which aligns with a weekly and monthly. So just to confirm that, check your trend line here. Where are we? 3200. So it'll fall towards this level here as a line. So let's chuck on the US 30, see what the go is there. Same similar structure, right, as S&P 500, albeit for a different index. So a high curve, the overall trend line is intact. This has been drawn on as of June because the reactive level took place, just to show that this area can have a reactive buy. Very similar structure, right, where you had the same pullback again here on the monthly. 2, 1, 2 and 1, perfect. Similar setup. However, this tailed off a bit quicker. The top has been made and fallen a lot quicker. What can you expect here is that price now is having a nice reactive buy, and yeah, I can definitely see for a bullish scenario heading up to the 3300, tapping and selling off, or extending up to the curve line. Subject to that, price will zigzag and chuck out a lot of buyers and sellers, causing a good amount of volatility, but also an opportunity to grab liquidity. It is an imbalance also, and there's an upper imbalance. So price here will look to decide whether it wants to go to the upper imbalance and retest the supply. But the more likely probability here is that it's a fresh original level, right? So this monthly zone is yet to be tested and doesn't really need testing. So price should spend more time in this fresh level between the range and break the floor and head down to the next structural level. It seems a bit scary because this original level is untested, but it needs testing. And again, what goes up must come down. It's pretty simple. So that's the weekly of what I expect. From a daily perspective, price is looking pretty good. Looking to take a buy within the next couple of days just to cover and compound the account. So what I'll be doing is taking a price and seeing what happens up at the CME level here. Price can then revert back, which is a highly likely probable scenario, because this is a hurdle point, the CME gap. Once you've fixated this CME gap here, price can then go up to the data level, as this curve is pretty steep. So if it was a steep curve, you got a new arrival point. It's broken the diagonal. It's now going to retest and break and retest, which is perfect, which is done here. So now it should be probability in your favor for upwards towards the next fresh level on the daily. From here, however, buys will be cancelled out and profits taken along the way. Once we get to this zone, waiting for a confirm either to the downside, retest, or just reactive tap and selling up on an impulse, getting the measured move down to here again between this trading range, and that will form you a nice weekly supply as a lower boundary here as well. So take that into account. Just a word of warning here: if you're a long-term investor like myself, weeklies and dailies is a great opportunity to hedge. So I've been hedging my bets since roughly around here. I got chucked out a few times within this zone, but this has been the real zone of impact of covering my longs. So still in play. Keep an eye on this level here. Keep an eye on this level here as well. Same setup for this. Got a steep diagonal. The price has broken and retested, and it's going to look to form back up to this PCP. If this fails, more than likely this will fail in the same time, or if this decides to drop, this will decide to drop also. So keep that in mind. Excuse me. And last but not least, we'll take a look at the US 30. So the US 30 treasury yields are pretty important. A lot of traders I see around look at the 10 and 2 just for more short term. But what can you see is that on the monthly, if you zoom right the way out back to the data start at 1987, it's been a steep curve to the downside, where interest rates have just come from 10% down to 4 right now. So what you can see is from fresh markings right now, curve has been broken, retested up to the upside. It's hit a previous imbalance here on a monthly between these two candles here. Let me draw that better because it's pretty terrible. But this is your zone of these two candles. It's headed across and it's netted out. Then it's engulfed on a monthly, and now it's headed up towards the fresh level. So it's tapped the first fresh level since 2014, which is pretty hectic. I wouldn't count this as a tap. Unfortunately, it did almost, but it hit the lower boundary, and you'll see that on a weekly. It's a first tap, so it's a strong supply. So expect price to deviate back to 2.6 or even the 1.4 fresh level. This is the more high probable zone for the moment. And the reason why is because the trend line on the weekly skews the mess, but it's relevant. So if we remove this really quick, remove this. This is your monthly zone. This is your new weekly zone here. This is your pullback, pivot point. So price can look back to pivot here on this X around 2.9%. So once you get to this path here, price can either retest and go up, head up, but it's such a strong supply, you're more than likely going to get a scenario like this for yields, which would suggest what? So that would suggest that this PCP level is going to be the gainer. So as finance becomes cheaper again, this looks to head bullish again. It makes sense. It's not causative, but it is correlated. So trade probabilities. And from a daily perspective, I don't really trade bonds purely because I'm not an investment bank. And my diversification is a bit more high risk due to proximity of age and investment horizon. So it all depends on what your strategy is. But if you can take a look at this and consider that and find high curve percentage points and realize that structure needs to break here. And where's the next point, right? It's going to go down here. There's your next patternal zone. And that aligns with the weekly. So you got to use your head and think logically. Always remember one thing. Trading psych is your choice. Don't over leverage and just trade the probability in your favor. So always use these as a reference point to come back to if you look for anything technical. So yeah, hope that helps you. And yeah, take it easy. Have a good one. Hooroo.